Hello friends, we have completed chapter number 5. Now we are going for chapter number 6 in accountancy, and as I said, our statistics portion is over for this first semester. Okay, now we are going for the 6th chapter in accountancy, which is given on page number 126. Friends, this chapter is mark scoring because this is very easy. The difficult topic in this was excluded from your syllabus. That is very good thing. Okay, let's continue the chapter on page number 126. Let's have some introduction for it. Okay, in the previous chapter we have studied the first entry for recording values. Day-to-day transactions is known as journal entry. They are talking about the journal entry chapter that we have learned to record the day-to-day transactions. The book in which such journal entries are recorded is also known as journal. When the number of transactions increase in large number, entering all the transactions in one book becomes difficult. Following limitations are of journal. They are telling that in our business, if day-to-day transactions are comparatively increasing day by day, if the transactions are more, then instead of writing all such transactions in journal, we have to maintain subsidiary books. And first they are talking about what are the limitations of the journal. While writing every transaction, the account name has to be mentioned. As you know, how much times you have sales entry, you have to always write customer account debit to sales, you have to write the name of customer, always write the narration, always write the proper amount with the discount and that. An individual posting of each account has debit and credit, hence involves repetitive journalizing of posting the work. The journal becomes bulky and voluminous and becomes difficult to manage. We need so much pages for writing because the transactions are comparatively more, and every time we have to give the narration. Such accounting system does not provide the information on prompt basis. It becomes very difficult to implement effective internal control system. In order to overcome these limitations, the journal is subdivided into subsidiary books. Because of the use of computer, these limitations have been neutralized. Nowadays it is okay that if you are maintaining journal or if you are maintaining subsidiary books and all these accounting work is done on computer. Then you may be thinking that why we are learning now accounts? Friends, we are learning for our base. If you are going after studying school, you are going to college, you are going for next job or maybe higher studies, then first you require the base. This is the main difference between a student of science or arts and a student of commerce. They can also learn account, that is not a difficult thing, but the account which we persons know, they can't know because their base is of science or arts. They can learn. There are so much students who are first doing some degrees in science and everything, and then they are taking commerce for learning this what is account, but they cannot learn properly because they are learning computerized, where you don't have to think about debit and credit, that computer will think. You will just enter the transactions. So our base is far more better than each one. Yeah. Okay. For large number of transactions which are repetitive, a separate book of journal is kept. For example, credit purchase, credit sales, cash sales. Specific transactions are noted in specific books. Such separate books of journal are known as subsidiary books. Now its meaning is given. Let's underline. Subsidiary books refer to journals kept for specific transactions for similar nature. Underline this again. I am reading. Subsidiary books refers to journal. They are a type of journal kept for specific transactions of similar nature. Means if it is purchase book, then all the purchase will be written here. If it is sales, then all the sales will be written here. In that way. Subsidiary books are also known as day books. Underline that also. A separate book for each division is maintained. For example, recording all credit purchase transactions, purchase book is prepared. For recording all sales transactions, sales book is prepared. Now, which are the types of subsidiary books that we are going to learn in different chapters? The first type is cash book. This is the 7th chapter. After this 6th chapter, we are going to learn that 7th chapter, cash books, and its 3 types, ABC, 3 types are given. I am not discussing it now. Then in this chapter, we are going to learn goods subsidiary books. In this chapter, 4 types: purchase, sales, purchase return, sales return. Then subsidiary books for bills that we are learning in second part of accountancy, and journal proper. Journal proper we are learning after 2 chapters. Okay, in this part only. The detailed explanation of above mentioned subsidiary books are as follows. This chapter includes only explanation of subsidiary books for goods. Now, what are these advantages for keeping subsidiary books? Division of work. If you are keeping purchase, sales, purchase returns, cash, credit, bills and all separately, then each member will be assigned for it and we can divide the work. Otherwise, what is the thing? Only one person has to write all the transactions. Division of labor. In the same way, if you are doing more and more work, then your labor means your majuri we tell that will be divided. Okay. Subsidiary books for goods. Next page they have given a flowchart. Types of goods subsidiary books: purchase, sales, purchase return, sales return. In that they are writing only credit purchase, credit sales, credit purchase return, credit sales return. They are writing this. The reason is that here only we will record the credit transaction only. Cash transaction we will not record. So before starting the purchase book, we are writing this thing, and I will also give which are the things to be excluded from the chapter. So let's all start. Right? Okay. This is chapter number 6. Subsidiary books. In that we are writing this chapter involves in what? Goods subsidiary books. Goods subsidiary books. Following flowchart will show the different types of goods subsidiary books. Following flowchart will show the different types of goods subsidiary books. Okay. Subsidiary book for goods. First will be purchase book. Sometimes also I am writing together. In book they have written in personal each explanation. So first is purchase book. In purchase book and in every other book there are two main subtypes and here also again subtypes. Simple, column, again two subtypes. Types of goods, types of expenses. in the same way. For each type we will write same thing. Sales. Because I am giving this full flow chart which is not given in book, because I have to explain which are the topics to be excluded. Okay, for that reason I am giving this thing, so that directly from the flow chart we can understand that which are the topics to be done and which are the topics to not to be done. Simple column. And you can also understand that what we can learn in this chapter. Types of goods, types of expense. Purchase returns book. Purchase sales. Purchase returns, sales returns. Okay. In each we have the same reason. Types of goods, types of expenses. Last everyone is knowing, because you have understood the flow chart now and what I am going to say. Sales book. So now our flow chart is at the end. Okay. So friends, format is ready. In total, 4 different types: purchase, sales, purchase returns, sales returns. After that, in each there are 2 main subtypes, simple columnar, in each you can see. And in each columnar, sub 2 types, type of goods, type of expense, in each you can see. Now friends, I have to say that in according to the new portion that is deducted, this second topic of each type of expenses, is not in portion. You have to just remember that these are the types, but this is not in portion. So I will write not excluded from portion. In each I will write excluded from portion. This is somewhat difficult, and that thing is only excluded from our portion, so it is very good thing. Okay, no problem. it is excluded or not, but we should know that total there are two types, and in that two subtypes for columnar. Now what do you mean by this simple and columnar? Simple means the amount column will be only one type. Columnar means the amount column is divided into according to types of goods and according to types of expenses. So this is the thing. So first you may all write this flowchart. First write the name of chapter, write this thing, write this flowchart, and then we will write the common necessary points for preparing this subsidiary books. Common necessary points for preparing this subsidiary books. So after this flowchart we will try. Okay, so now we will give the heading common necessary points to be kept in mind. While preparing goods subsidiary books. In each type we have to remember these things. Number one, these subsidiary books are for credit transactions only. These subsidiary books are for credit transactions only. Means if you are purchasing or selling in cash, then that transactions are not included here. So these subsidiary books are for credit transactions only. Okay. Moreover, detailing the above point. Moreover, detailing the above point means talking about the first point, that is previous point. If any transaction is partial cash and partial credit, then the whole transaction will be first considered as credit transaction and recorded in this books. Okay, friends. Moreover, detailing the above point means the above point, if we are going in detail, if any transaction is partial cash and partial credit. What is this partial cash and partial credit? I may give an example. That if we are purchasing the goods for 10,000, half amount is paid by check or by cash, then that half transaction is cash and half transaction is credit, because for the half amount you have paid by cash or check and for the remaining half amount you have not paid. So what to do at that time? The whole transaction will be considered as credit transaction and recorded in these books. That whole transaction first we will consider as credit and then we will record it in our books. Expenses incurred for goods are not recorded here. If some expenses are given, see, expenses type subsidiary books is different thing. But if we are preparing a simple subsidiary book with only one column and expenses are given, then expenses are not recorded here. That are excluded from here. Number 4. Net amount of goods is recorded. Net amount of goods is recorded in subsidiary books. Full stop. In next line we will write I dot E means that is net amount is equals to total amount of goods less trade discount. As you know friends, that trade discount is not recorded in books. So while recording the transaction in subsidiary books, we will deduct that trade discount and we will write the net amount. Transaction of purchase or sale of assets is not recorded. Transaction of purchase or sale of assets is not recorded. We are only recording the goods. We are not recording the asset purchase sales. So by mistake don't write the transactions here. So these are the main 5 points which are to be remembered while writing this thing. Okay, and with that thing I am not giving here because that is a common thing which we have learned in chapter number 2. You have to identify the transaction, whether it is a cash or credit. That thing, that explanation is actually not required because we have learned in chapter number 2. If no name is given, then it is cash transaction only, so you have to not record it. So if name is only given and word cash is not given, sometimes it is given that purchase goods from Mr. R on cash, then R name is given, then by mistake you will write the transaction. That transaction is not recorded because on cash it is given. So that thing you must identify that whether it is a cash or credit transaction plus these 5 points is required for each and every type of subsidiary book, whether we are seeing a purchase book or sales book or anything. So friends, you need to know these points. Now we are going what is written in purchase book. Okay. So on page number 128, subsidiary book in which only credit purchase transactions are recorded is called a purchase book. Underline that thing. In purchase book we are recording only credit purchase transaction. The goods in which a trader deals in credit purchase and sales, the credit purchase details are recorded in purchase book. Cash purchase transactions and purchase of any other assets are not recorded in this book. We have written that only credit transaction, no cash transaction. Partial cash transaction and partial credit transactions are considered as credit transaction and recorded in books. If the transaction is partial cash and partial credit, consider whole as credit transaction and record. All these things I have given. Because for purchase, sales, purchase return, sales return, differently this thing is given in every topic. So we have written that thing as a common point. Net amount of purchase is recorded in book. I have given the net amount. Total amount minus trade discount. Purchase book can be maintained in different ways. Purchase book is having simple purchase book, columnar purchase book. That also thing flowchart we have drawn. And columnar with having type of goods and types of expense. Thus there are 2 types of purchase book, simple and columnar. Further, columnar purchase book is divided in 2 parts, columnar and type of goods, type of expense. Now first we are looking for simple purchase book. When a businessman is purchasing only one type of goods, generally simple purchase book is maintained. Even when more than one type of goods are purchased, separate simple purchase book for each type of goods can be maintained. Means here only one amount column will be there. Now a specimen of purchase book, simple purchase book is given. Which are the columns? See, again I am saying in accountancy you have to remember, you don't have to by heart, you have to remember the columns. If you are not remembering, then it will be a great problem. Date, name, okay, first heading how to give purchase book of Shri Dash. Date, name of supplier, inward invoice number means it is a bill number, and why it is inward? Because goods are coming in. LF number, again nothing will be there, and amount. Then we are taking the total and explanation is given. And then on page number 130, columnar purchase book is given. Let's see that also, and then we will start the sums. We have seen that columnar purchase book can be prepared in two types of goods and types of expense. Now columnar purchase book according to types of goods is in our course, but type of expense for each. For sales, purchase return and sales return also it is excluded. Okay? Yes. So I will write the names of which are the illustrations to be ignored and not. That I have not written. After seeing this topic, I will give. When a businessman purchases goods for more than one type, columnar purchase book for each type of goods is prepared instead of simple purchase book to know the details about variety of goods. Okay, so they are telling that whenever we are having different types of goods, to know which are the goods to be purchased, we are preparing this columnar purchase book. And you can see the format. I have taken this topic now because we have to compare what is the basic difference between simple and column. See, there was date column, here also date column is there. Name of supplier is also there, inward invoice number, LF is also there. Now amount column is see, they have differently made the columns of amount only, no other change. So amount has TV, refrigerator, floor mill, means these are the type of goods, and then we have to take the total, and below also we have to take the total. So this is like statistics. Horizontal and vertical totals must be same. Now for each and every type same format is there, only some names will change, the name of customer or name of supplier, and these things we will have. Okay, and then which is not in our topic, that is given on page number 132, how we prepare a purchase book with expenses. We are just seeing, that is in our, not in our course, but thus this is for a general knowledge. On page number 132 you can see date, name of supplier, inward invoice number, LF number. Now see, for amount column, first we will write net amount, then on it we are having expenses like railway freight, wages, IGST, SGST, CGST and all, and then we are having the total. Means that is according to the type of expense, and this is according to the type of goods. Expense is little bit difficult, goods are very easy. And then sums are given, and then sales book is given. So first we will write which are the illustration and which are the things to be excluded. Okay. So after this you may write note. Illustrations and sums of exercise to be ignored. Illustrations and sums of exercise to be ignored. Which are they? Okay. Illustration 3, illustration 6, illustration 9. Okay, 3 illustrations, 3, 6 and 9. Okay, yeah. Then exercise, sum 6, 9, 30. Friends, these are the illustrations and sum that you will ignore, because all these are related to that exercises. Okay. Illustration 3, 6, 9, and for exercise sum number 6, 9, 30. Excluding this, we will do all the sums for exercise. Now after this, write the heading. Now we are writing number 1, purchase book. In that, the common points we have written, so we don't have to write. So just we are writing specific. In that, number 1, specimen of simple purchase book. Specimen of simple purchase book. If we are drawing the specimen, then it's easy to understand. Okay? Yeah. So, heading will be purchase book of Shri dash. Then columns will be date, name of supplier. Friends, as I said yesterday, these suppliers are our creditors also, from whom we are purchasing the goods and we have to pay the amount in future. Then inward invoice number, or we can say it is bill number. Then LF number, and then amount invoice. So this is the specimen of a simple purchase book. And finally we will take the total also. And we will write total credit purchase. Total credit purchase. Okay. Then number 2, specimen of columnar purchase book. Specimen of columnar purchase book with type of goods. Specimen of columnar purchase book with type of goods. Its type of expense is not in our code, so we are just writing this only. Again, heading will be same. Purchase book of Shri dash. Then columns will be same. Date, name of supplier, then inward invoice number. I will not give the details. Okay, now bill number and creditor. Now it is not required. Now LF number. Now for amount, supposing book only it is given TV, fridge, washing machine. Maximum there will be only 3, not 4. Okay? And then finally we have to do its total also. Yes. So friends, this is our column with type of goods. Again at the last we will write total credit purchase. Take total. Okay, so these are the specimen for simple purchase book and columnar purchase book with type of goods. What is the basic difference? You can see here the amount column is only one, and here the amount is divided into different types of goods and then its total is taken. So this much thing is extra. Okay friends, now we are going for the first sum, that is fourth sum of the exercise, and that is of simple purchase. Then we will have column. So in exercise we are going for the fourth sum. Okay. Which is given on page number 151. Okay, on page number 151, question number 4 is given. Prepare a purchase book in the books of Sri Suresh. Okay, so this is the purchase book of Sri Suresh. Let us go for it. So exercise. In that question number 4, in that purchase book of Sri Suresh, in that date, name of supplier, then invoice number, then LF number, and then amount in rupees. Now friends, as nothing is given, it is simple purchase book. If it is columnar purchase book, then in the heading itself they will specify that make these columns. Okay, so if nothing is given, then that is a simple purchase book only. So this thing is common to understand, that in the heading itself they will specify what type of book you have to prepare. Yes, so we have drawn the format and let's start the sum. Remember, only such transactions which are credit and which are of goods, and partial credit is also allowed, and no expense will all be written. Okay. So on 1st October, so it is not necessary that all the transactions are included. Okay, so understand this. Purchased goods of rupees 10,000 from Deepak on 1 month credit. So this transaction will be recorded. First you decide that it is to be recorded or not, and then decide why it is to be recorded, and if not, then also you think. So we are purchasing goods from Deepak on 1 month credit, so this transaction will be recorded. Don't think about Deepak debit here, no debit credit here, directly. How to write the transaction? It is very easy. Date is 1st October, so 1/10/50. Who is the supplier? Deepak. So we will write Deepak account. Bill number is given? No, bill number is not given. So dash. LF, don't write anything. And goods directly of 10,000. Okay, you will get 1 marks. Now you all will think that this is very easy than journal entry. Comparing to journal entry, this thing is very easy because nothing you have to do. You have to directly write the name and directly write the amount. And in that also, if trade discount is to be subtracted, then subtract from your calculator. But by mistake, if some transaction is not to be written and you are writing, then marks will be cut from that. Remember that. Because this thing is very easy, nothing is there. Write the date, write the name, write the bill number if it is given, and write the amount. Otherwise, nothing is there in this transaction. Okay, friends? Yeah. Okay, now on third one. Purchase goods of rupees 20,000 from Sardar stores at 10% trade discount, invoice number 116. So we are purchasing the goods from Sardar stores, nothing is given for the payment. So again this transaction will also be recorded. 3/10/50. Sardar stores account. Bill number 116. Okay. Now goods are of 20,000 and 10% trade discount is allowed. So 20,000 minus 10 and press the percentage button, you will get the amount as 18,000. Next, 7th. So don't write directly the date because some transactions are not recorded. Purchase goods of 18,000 from Pankaj. If this much is given, then it is credit, but after that on cash what is given, so this transaction is not to be written. Again, purchase goods of 18,000 from Pankaj on cash. We are purchasing the goods from Pankaj. Name is given, but after that on cash what is given, so we have paid the amount immediately. Here it will not be recorded. Okay. Next, 15th. Placed order with Rajesh for supplying goods of 20,000 at 10% trade discount. We are just placing the order, so it is a non-economic transaction. This also will not be recorded. On 20. Purchased furniture of 16,000 from Vyas Furniture Mart on 1 month credit. Now by mistake don't write because you will think that this is a credit transaction. We will write because this is not written. This is purchase of asset. Furniture is asset. We are not purchasing the goods. We are purchasing an asset. So this also will not be recorded. Now Rajesh has sent the goods as per the order and sent the invoice number 350 after adding 1,000 for railway freight. We have given the order to Rajesh on 15th. Now he is sending the goods. So we are purchasing the goods from Rajesh of 20,000. See, in 15th date only it is written. Of 20,000 and a trade 10% trade discount, and he is giving 1,000 for railway freight. That will not be recorded. As I said, the expenses given are not recorded. Okay, so this transaction will be recorded. So directly after 3rd date, 21st date, 21, 10, 15, Rajesh account, bill number is 350. And again, just now only we have done. Goods are of 20,000. So do in your calculator 20,000 minus 10 and percentage. So again 18. So again 18,000, and that expense will not be recorded here. We have to write below after completing this. Okay, that why we are not recording. Okay. 24th. Goods of 14,000. Purchase goods of 14,000 at 5% cash discount. Now see, in this transaction no name is given. So this is a cash transaction. Why? Because if we are purchasing from the party, then that name is to be given. So simple common sense. Name is not given, so this is a cash transaction. So this also will not be recorded. 25th. Purchase goods of 30,000 from Nilesh at 10% trade discount, and half of the amount is immediately paid by check. Amount is paid but half. So we will ignore that half amount. We will directly write the whole amount, okay, as credit transaction. So on 25th, 25, 10, 15, Nilesh account. Bill number is not given, no problem. Then goods are of 30,000 and 10% is the trade discount. So take your calculators, write 30,000, press minus 10 and percentage. So you will get 27,000. Okay. Still there are two transactions. Don't forget. In the next page it is given. On 26th. Purchase goods of 15,000 from Chirag at 10% trade discount and 5% cash discount. Amount is paid immediately. See, understand the difference between 25th and 26th. In 25th, half amount is paid, so full amount is considered as credit only. But in 26th, the whole amount is paid, so this is a totally cash transaction, will not be recorded here. Okay, now last. Purchase goods of 40,000 from Nitin, invoice number 151. We are just purchasing the goods, we are not paying the amount. We'll write. Okay. So 30, 10, 50. Nitin account. Bill number 151. Amount 40,000. Okay. So now total. now we'll take the total credit purchase. Okay, let's take the total. $10,000, $18,000, $27,000, $40,000. So it's 1,13,000. It's better to do like this. Okay, don't draw the whole line. It's better to do like this one. Instead of doing the whole line, this looks very good. Now, the sum is not over. In this sum, there were so much transactions, and some of the transactions we have not recorded, so we have to show it as note. It also carries half marks. Each note carries half mark. A short narration type you have to write. This is for your better understanding and for the paper checker also, and your better understanding also. So the transactions which we have not recorded, we will again see. First, third we have recorded. Now we have not recorded 7th transaction. So write 7 and 50. And what was the reason for not recording that transaction? We have purchased the goods on cash. So purchased goods on cash. Then 15th transaction, 15, 10, 15. Why we have not recorded? Placed an order. Placed an order, non-economic transaction. Then 20th transaction, we were purchasing that furniture, so we will write purchase of an asset. Then 21st we have recorded, 24th we have again not recorded. 24 and 50. We have again purchased goods on cash. Purchased goods on cash. Again, for 25th we have recorded, but its expense was not recorded. Sorry, not on 25th, on 21st. No problem, if the date is going up and down, then it's not a problem. On 21st, that expense we have not recorded. Railway freight expense will be recorded to journal proper. So friends, whenever you are having such expense, so always you will write that expense will be railway freight. Here the expense name is railway. Will be recorded where? To journal proper. Journal entry, not journal proper. What is this journal proper? We will learn after this chapter. Then 25th we have recorded. Then 26th we have again not recorded. 26, 10, 15. Purchased goods on cash. Again 30th we have recorded. So 1 marks for each, half of marks for this. But in exam this much long question will not be there. Only 4 transactions will be there. And suppose 3 are recorded here, then 3 marks, and 1 is recorded here, then half marks for that, and half marks for your presentation and drawing. So total maybe 4 marks it will be asked, but I will say in detail how I will not worry about that. So I think this is easier than journal entry, because just you have to write the names and write them out. And this is as per your words. A short narration should be given that why we have not recorded the transaction. And by mistake, if you are forgetting some transaction, then it's not a problem. After 20, it should come 21. But if you are forgetting for writing this note, then it's not a problem. So friends, we have completed one sum and we have seen the total introduction and total of all the theories of the chapter. So tomorrow we will continue again the next sum. That's all for today. Thank you so much.